Well, hello everybody and welcome to the very first episode of the Lincoln Property and Mortgage Show. I'm Michael Hollenby from Hollenby Mackay Bespoke Estate Agents, joined today by Jenny Holt from the Mortgage Hub. Really pleased that you're joining us today. Thank you so much for all the words of encouragement and support we've had from many of our followers already. This is really exciting. This has come really from an idea from Jenny. We spoke probably only about a week ago, wasn't it, Jenny?
Yeah, something like that. Last weekend.
Last weekend, where we were we've both been getting lots of questions asked of us recently about what's happening with the mortgage market and the property market. And as sort of two professionals in this field, we thought, actually, let's get our heads together and see how we can sort of service our sort of audience and our marketplace in and around Lincoln, where we both work. So we got our heads together and we decided that my background with agency and using videography, and Jenny, you're fantastic over on your social media. Some incredible posts that you put out, giving out loads and loads of free advice and help and tips for everybody. We just thought, actually, let's try a format where we can get our ideas out. We can be putting some posts out to sort of help, again, the sort of homeowners and property owners in and around Lincoln, and also, obviously people like first-time buyers and things that are thinking of moving into the marketplace. So we've created the Lincoln Property and Mortgage Show. And the idea really, as I say, is to be very reactive to the marketplace, to give you lots of free tips, help, advice, and some guidance in what can be an absolute maze and a nightmare. So what we wanted to do today is we're going to tackle three main subjects of what we've been been asked of recently. But what we're going to do today is we're going to give a quick introduction. Then what we're going to do is start off by talking a little bit about the interest rates and what's happening in the marketplace to start off with. So if you're watching this either live today or if you're watching it as a repost, what I do want you to do though is to hit us a like, follow both of our pages as well. We'll be putting all the details of that throughout the show as well. So it's only probably going to take 15-20 minutes. We don't want this to something that's going to be dragging on. We want to make sure we give you the hard facts, fast and hard, so that you get the information that you need. So, Jenny, let's come over to you. Let's have a bit of an introduction from yourself, and obviously what we're aiming to help all of our viewers with your advice today.
Thank you, Michael. Yeah, as Michael said, my name's Jenny Holt and I am from Your Mortgage Hub. So I am a mortgage broker, but I hope I'm not the typical person in a grey suit that's going to rock up at your door and throw some facts and figures at you. For me, I do this job because I absolutely love going on a journey with my clients. I enjoy taking that when they come to me and say, Jenny, I'm looking at doing this, and we go right through to collecting those keys and even beyond. So a big passion of mine is making sure that all of my clients understand their mortgage, can work with their mortgage and not against their mortgage. And unfortunately, I see some people don't always get a mortgage that suits their needs now and in the future. So a big passion of mine is making sure that you guys understand what you're looking to achieve and me being able to facilitate that for you.
Fantastic. And I think one of the things that I sort of pick up, Jenny, when I'm looking through your posts is you cut through a lot of the jargon and take away a lot of the headache and a lot of the worry and stress when you hear these headlines in the news. So if you're not already following Jenny, please make sure you do. You've got a great following already, Jenny, but if that's something that's going to help you, make sure you follow all of her pages. As I say, my name's Michael. I've been an agent in Lincoln just over 31 years. Set up my own bespoke estate agency last year with the sole aim of making sure that I help the homeowners of Lincoln achieve the best outcome in the sale of their property, using very cutting edge technology, video, presenter-led video, and just the best form of marketing to make sure that I achieve the highest amount of attention and exposure possible on your home. So let's kick off with today's show. One of the benefits of being live is that you can also interact with us throughout the show. If you've got any questions, please make sure if you go over to the comments box, you can ask us a question. You can put a comment in there, but please just make sure you put your name in that question as well for us, just so that when it comes through, we can see who's asking the question as well. If you're watching this on a repeat or when we've been reposting it out, you can still participate. You can still put a comment in for us. We'll pick that up and we'll make sure that we come back to you with the relevant help. Okay, so let's start off, guys. If we're going to start with three things, as I say, of what's coming up, we're going to be looking at, Jenny, what's happening with the mortgage rates and how does that affect you? Then it's going to come back over to me, and I'm going to be talking to you about what's happening in the Lincoln property market now and what I see happening in the last 3 months of this year. And then, Jenny, we're going to be coming back to you, which is something that's a really prominent question at the moment. Is a lot of people are worried about interest rates and what's been happening and the increase. And you're going to be tackling the conversation about what happens when my fixed rate mortgage rate finishes. Yeah?
Yeah, absolutely.
So a big thank you for watching. As I say, let's go over to you then, Jen, if you want to talk to us a little bit about, obviously, interest rates and what's the interest saying all about them in the marketplace now.
Thank you, Michael. So, as we all know, interest rates have increased, and that's a lot to do with inflation and what's happening in the marketplace. So, you may or may not be aware that the your Bank of England base rate is at 5.25%. Now, that stabilised this month, and it was sort of ended 14 consecutive increases. Now, we think the stabilisation has come because inflation has dropped better than expected. To be fair, it's not quite where we need it to be, and I think for the remainder of 2023 we could see the base rate even increase a little bit more. But at the moment, we're in a period of stability, and I think that's really important for people who are looking at maybe getting a mortgage, or maybe they're looking at remortgages, or just putting that first sort of foot on the ladder, as you was. So it is in a period of stabilisation. I don't think we're going to see any really heavy competition and heavy pricing from lenders. What they're looking for is that stability and ensuring that the economy is sort of chugging along, as it were. A couple of lenders this week has come out with some 5% mortgages, sub 5%, which is fantastic, and I'm hoping that's going to encourage more lenders to do the same. And obviously, the lower the interest rate, the lower the monthly payment to you guys. But I truly believe that these interest rates, and speaking to high street lenders as well around this, the interest rates are kind of here for at least till the end of this year, maybe into early next year, with the base rate expecting to get to about 4 or 5% before we really start to see the cost of those rates dropping for you. Now, to give you an idea, a really stable economy is when we see the base rate around the 4 and the 5%. That is where, in an ideal world, we'd want them to be. The issues and the problems that we're seeing at the moment is that the wages and the cost of living really haven't kept up with that. So that's where the struggle is. So if you are waiting to see the rates at 2 or 3%, I hate to say it to you, you could be waiting some time. Yep. But we are seeing them starting to drop down, and we could maybe hit those high 4s come the end of the year, which is all great news for our borrowers out there.
So just picking up on that, if there is somebody out there at the moment that's contemplating moving or is looking at buying a property, and they're thinking, with a little bit of uncertainty with the rates and things, what would your advice be? Would you advise them to get cracked on with it now with that uncertainty, or would you ask them to sort of wait? Or what would you be telling people who are in that market at the moment about thinking of moving or taking on a new mortgage?
Do you know, Michael, I answer this question in the same way every single time. It's like having a baby. There is no good time to have a baby. There's always something that could be better or something that could be worse. And actually moving home or getting a mortgage is very similar. You're always going to find reasons to do it and reasons not to do it. What I would recommend anyone to look at is their individual circumstances. Do they feel comfortable making those payments? Can they find the house and the home that they want to live in? And actually, will it meet their needs? If you can answer yes to them, then I would say it's a fantastic time to move. If you're turning around and you're saying, look, one of those don't feel comfortable with me, then potentially no, it's probably not the right time for you to move.
Great answer. And that's actually going to lead into something really nice in regard to what I wanted to talk about with the market as well. So great to see that we're fully aligned on that as well. So thank you for that. Anything else you wanted to add there with what's happening there?
No, I guess the only thing I would say is try not to be scaremongered by what's happening in the news. If you have any concerns, reach out to a mortgage broker. We're here to help you, and try not to listen to too much bad news, because sometimes it's not as bad as they make out.
No, a lot of clickbait and scaremongering to sell newspapers and get
Absolutely.
headlines and people onto their news feeds. So, okay, great. That's really, really helpful. So again, just to point that back over, if you've got any questions about, the interest rates, what's happening, any advice that you need, just reach out to Jenny. Again, you're able to source a lot of the sort of products in the marketplace as
Yeah.
well, aren't you, Jenny?
Yeah, absolutely. We have some fantastic lenders, both on and off the high street that we can go to. So I'm quite confident I could secure you a mortgage if we need to.
Fantastic. Excellent. Great. Thank you for that. So if you've got any questions, drop it into the comments box, add your name or reach out to Jenny. So the next thing that I'm going to be talking about is what's happening in the Lincoln property market at the moment and what can we expect in the final quarter. So really topical this. It's one of the key questions that I get asked even when I'm on an initial phone call, or even to be fair, if I'm out and about, either walking through the high streets or in any of the venues out in Lincoln, a lot of people sort of just come up and sort of start asking me about what I think is happening in the marketplace and where it's going. The answer to that at the moment is the market is picking up. It's been a really, really tough 12 months, really tough 12 months. So I've been doing this 31 years. I've seen the rise and fall from sort of 2008, 2009, when it picked up again, 2015, 2016, and when it's dropped down again. And it has been a hard market. I've opened up Hollandby Mackay Agents 12 months ago, which was just when it all started kicking off. So I can tell you that with years and years of experience, it's been hard work. That said, a lot of the media and the interest rates has had an influence on that market. Cost of living, we've all seen utility bills up, food bills going up. It's been hard work. With the stabilization of the interest rates only a few weeks ago, and also, like you were saying earlier there, Jenny, about the media, they've quietened off a little bit. So that brings back a little bit of confidence back into the marketplace. So if I just look at the last 2 weeks, which is where the interest rate sort of influence came in when it stabilized there, Lincoln estate agents, so collectively all the agents have put on, if you go on there onto Rightmove, let's use that as my source of information today because that's where the majority of people go to, there's 411 new properties that have come to the market in those 14 days. But when you drill down that, 101 of those new properties are actually new priced properties. So you're left there with about 310 new homes. Now, to put that into perspective, that's a big increase from where we were the 14 days prior to that, and a huge increase from where we were 3 months ago. So what that indicates is there are now more people seriously thinking about moving and are putting their homes on the market. And what is interesting with those price reductions is a lot of those properties would have come on the market 3 or 6 months prior and still haven't sold. So it is getting very competitive in the marketplace, and it is a very price sensitive market. So if you go on the market just slightly high or slightly ambitious, the chances are you will still be on the market potentially in 12 weeks' time. So it is really important to get good advice from your agent. When you're looking at moving, talk to several different agents and get a real good feel of knowledge and experience on where they feel that your home is sitting in the marketplace. It is always important to stress that one of the key roles of an agent is to get you the best outcome, and that can sometimes be the best price. But just listen to the advice that they're giving. Always try, but then have a plan in place if you need to do a price alignment later on down the line. But it's interesting. It's important that if you do a price change, that the agent has a plan on what they're going to do for the new marketing to attract it back in to the maximum marketplace, looking in that new price bracket. So that's the first thing. The second thing I want to talk about is something that you touched on earlier about rates and how that influences the marketplace. So one of the things I'm talking to a lot of people is date the rate, marry the home. Really important. Date the rate, marry the home. So if you are out looking for a property and your needs are that you need to move from a 3-bedroom semi to a 4-bedroom detached, or you need more living space or work from home office, and your wants and needs are to move, and you find a property that you can see as your home for many years, marry the home, date the rate, because the rates will change over the next 5, 10, 15, 20 years. The average timescale of a homeowner in Lincoln is 7.5 years before they look to move. That's the average. But some people have moved much faster than that. And interestingly, just over 20% of people who bought just coming out of COVID have then thought about remarketing and selling their property again in the last 3 years. So we've seen a real change in the marketplace.
Mm.
So one of the things that I am saying to people is, if you are needing to move and you want to move and you find a home, buy it, because the interest rates will always change. You know, we're from a background of seeing them very, very high all the way down, and we've had years and years and years of very, very low interest rates. One thing to take into account is still the likelihood of the value capital growth of your home will increase over that long-term period. We've seen it years and years and years and decades. So the past will indicate what's likely to happen in the future. Okay, so there could be some time where, yes, you know, the value might slip down a little bit. And we have seen, as I say, prices drop down just over 3.5% around about the Lincoln area over the last few years. But that said, it's also based on making sure that you get the best market price in the property market today. So just to come back to that, date the rate, marry the home. So my key thing there is move if you need to move and it's going to be the right property. Where do I see it going for the next 3 months? I still think it's going to be a very, very price sensitive market. I think a lot of people are putting their homes on the market now with the hope and expectation of selling and moving by Christmas, which, although we've just got into October, seems a long way away. But even if you sell in the next 3 to 4 weeks, and of those 310 properties that have come on the market, there are just over 12 properties that have sold straight away in the first 10 to 14 days. So there is that activity. But I see it very much so that the next 3 months is still going to be about price sensitivity. And just coming back to that point, even if you sell in the next 2 to 4 weeks, the average timescale for completion could potentially take you into the new year, just with how the conveyancing process and the changes with, you know, getting a lot of the paperwork ready with the conveyancing. It could potentially take you just over that, depending on your circumstances. So I just see it's going to be a very busy market. I know a lot of people that will be watching this are usually glued to their mobile phones looking at Rightmove on a daily basis. But what I would say to you is if you're thinking of moving, reach out to a number of agents, get their advice, find out, you know, what their experience is selling in this marketplace, and just make sure that you're using the right agent to give you the best advice.
Perfect, Michael. Just on the back of that, do you feel, Michael, that there's maybe a certain group of people that will potentially look to move during the next few months, or are we sort of going across the board there with sort of first-time buyers, home movers, landlords?
Yeah, that's a great question. So just interestingly, the highest percentage of price reductions are properties under 220,000. So that is your first-time buyer market. Okay, extremely competitive in that marketplace, and I think this is one of the key things. We were hoping that first-time buyers were going to come back into the marketplace. The data would say they're not. They're not there in big numbers. They are waiting to see what happens with rates. There needs to be some confidence back into the first-time buyer side, because again, you know, these are often people who are starting off in their careers or have been rented for a number of years. And we were talking a few weeks ago about some of the mortgage products that are now available for people who have been renting and can show that they've been renting for a long time. So again, if that's you, reach out to Jenny. So I think the hardest market in Lincoln at the moment is anybody who's selling under the 250 to 220 bracket. Very, very fiercely competitive. You've got to attract the first-time buyer or somebody who's in a smaller property moving up in value up to that price bracket. That said, the top end bracket, so anything over sort of 600 up, that's been the tough market at the moment. The mid market from 250 to maybe 500 to 550, that's really where we're starting to see a lot of the sales coming through at the moment, and where most of the properties that are coming on the market are in that price bracket.
Yeah, and to be fair, Michael, I see that when I'm looking at the mortgage side of things as well. We had a flurry of first-time buyers at the beginning of the year, and they have kind of dropped off now, and we are seeing that sort of middle range market coming back in for their mortgages as well.
Excellent. So let's go back over to you then, Jenny. And this is something that you're getting asked a lot of, particularly for current homeowners. And they're often having sort of sleepless nights thinking, oh my God, I'm hearing all this news about fixed rates going up and mortgage rates going up. Thank God I'm in a fixed rate, but oh God, I've only got like 12 or 18 months left and I'm only on a 1.2 or a 2% rate. What's that going to affect, and how's that going to affect me? So if you want to spend a few minutes then just talking about what's happening in there and what you see, you know, how you can help people there.
Yeah, absolutely. And it is a massive topic at the moment. And it is unfortunately keeping people awake at night. And I think the key thing to take away from this is to speak to your mortgage broker early doors, and be prepared. The likelihood you are going to see your monthly mortgage payments increase when you come off your current deal. There's very few people that are going to take a reduction in that. Now, a couple of things to be aware about is back, I think it was about June time this year, the government and lots of lenders brought in a mortgage charter. And this was to help ease people coming off of their products onto the new rates, and how can, as an industry, we make that a smoother process and a lot easier for you. So a couple of key things I want to highlight here is, as part of the mortgage charter, you can switch your deal 3 to 6 months before your current rate comes to an end. Now, it's lender specific. Some say 3, some say 6. The beauty of this, though, is when we're in this period where rates are changing, if you can fix into or take a new deal early doors, if those rates drop before your current deal comes to an end, many lenders will allow you to take that rate. So what it allows you to do is a peace of mind knowing that you've secured the best rate at this time. But if those rates do drop, we've got so many lenders that are willing just to change that product and allow you to take that lower rate. So it kind of works really, really well. Not all lenders offer this. So definitely speak to a mortgage broker who can kind of guide you to the right product and the right lender that will allow you to do that. And the other thing this mortgage charter is allowing you to do is convert to interest only. Now, look, interest only has been a dirty word for many years, and I think there's a place for it, but I think we have to be super careful. So lenders have agreed that you can convert to an interest only mortgage for 6 months. Now, the idea of that is to try and get your finances in sorted. Maybe if you've got some high credit cards, use that extra cash to bring that down. My opinion, really, how, if people are struggling, is 6 months really enough? And all of the capital that you've not paid is going to be put on at the end. So it may be a stopgap, but really, honestly, I think it's not going to answer all of your problems. And if you are looking at going interest only, you really should be taking some advice from a mortgage broker in terms of that. Now, the other thing that's come out of this mortgage charter, which, Michael, I think is probably the best thing that I've seen for many years, is being able to extend your mortgage term. Now, for those that aren't aware, your mortgage term will really dictate what your monthly payments is. The longer the mortgage term, the lower the monthly payment. Now, obviously, the longer the term, the more interest you will be paying. And I truly feel that this should be seen as a stopgap and not a solution to all of your problems. So lenders who've signed up to this mortgage charter are saying, look, you can extend the term to the maximum term that we allowed based on your age and based on our criteria. So you could be on a 30-year mortgage term, and you could put another 10 years and take it right to the maximum, or 40, which will see those monthly payments come down. If you are looking to do this, and all of my clients that we are talking through this, we come up with a plan, because we don't want you having to pay that extra long term for a long period of time. So when we're looking at this, we're looking at, can we make overpayments to reduce that back down? Is there anything that's going to come up in the future that will allow us, such as, I don't know, maybe someone moves out of the home, maybe your kids fly the nest, maybe you get a pay rise. At that point, we need to be looking to see if we can reduce that mortgage term down, because the mortgage term is the most fluid piece of your mortgage and can be changed at any point. You do not need to wait for your mortgage product to end to change that. So if you do have a pay rise or your circumstances change, review your mortgage term, because it's the best way that you're going to save some interest and manage those monthly payments for you. So that's sort of the 3 key areas in terms of the mortgage product. But if my mortgage product was coming to an end, I would be looking at my finances to see, is there anything that I can maybe get rid of? Have I got direct debits that are floating around that I have absolutely no idea what they're for? Do I have credit cards or any revolving credit that actually I can start to reduce down over that period? So when my product comes to an end, I'm in the best possible place. And as always, if you are ever worried about your mortgage payments, please speak to your mortgage broker or your lender We're here to help you. We want to help you. It's why we do the role, and just keep in touch as you're coming off of that product.
Great advice there. And I think there's just one thing I just wanted to ask you as well, because this is something that I've been asked by 2 people recently, is one of the concerns with these homeowners is, are they going to need to reapply with their lender when the mortgage rate ends, their fixed rate ends? Do they have to then reapply with their lender, knowing that potentially some of their household bills and things will have increased and their cost of living will have increased? Sometimes I'm getting a feel that some homeowners are worried, thinking, God, if I've got to reapply for a mortgage, what am I going to do? I'm going to have to maybe move.
Yeah, and that's a really good question, to be fair. There's 2 types of remortgages. So when your product comes to an end, you can do what's called a product switch. That is basically remaining with your current lender and it's taking on a new deal. And then a remortgage is when we're going to move you away from your current lender. Now, you should always look at both options, but worst case scenario, the majority of lenders out there will allow you to do a product switch, which means they won't check the affordability, they won't check the credit file. It will be down to your mortgage broker to deem that that is affordable for you. And we do that in a number of ways, by having a really good conversation with you, looking at some documents and ensuring that any increases is affordable for you. So that there's 2 options, and you should always look at both, because coming and going and staying with your current lender may not be the best deal or the best mortgage that you can attain. So it's always good to look at all of the options, but 9 times out of 10, you can, worst case scenario, fix or switch into a new deal once your product comes with your current lender.
Fantastic. Great advice there. Thanks so much indeed, Jenny. So if you've got any further questions on that, please reach out to us. This is exactly why we're doing the show. This is exactly why we're wanting to help, the sort of communities in and around Lincoln. So that's the end of the first show. That's absolutely flown by. And so thanks ever so much for watching there. The next show is coming live again next Tuesday, the 10th of October at 4 o'clock. Again, we'll be recording that and reposting that back out. There are the two main topics we're going to be covering next week, Jenny. The first one is going to be the 3 Ds and how that will affect you. We're not going to tell you what they are. We're going to keep you waiting so that you tune back in again next week. The 3 Ds and how that's going to affect you in the mortgage market. I'm going to be covering over the 3 top questions and things that you need to consider when you're talking to an estate agent about selling your home. So we're looking forward to getting that ready for you for next week. For the following week, we want to reach out to you guys to find out what you want us to talk about. So what are you worried about? What do you want to know about in the Lincoln property and the mortgage market at the moment, and how is that affecting you? So if you've got a question, drop us a line. Finally, as I say, if you are able to, just like our pages. Again, we'll put you the details of all of our contact pages for all of our social media, for Facebook, for Instagram, and on LinkedIn. Drop us a follow and a like on those as well. Let's get the word out there that this show is now out there. We really putting this together because we feel that there is a need to service our communities in and around Lincoln. So let's spread the word around, guys. Thanks ever so much indeed for your support, as I said right at the beginning of the show. Thanks for watching, and we will look forward to seeing you again next Tuesday, 10th of October at 4 o'clock.
Perfect. Thanks, guys.